What's going on, everybody? Lawrence from financialthing.com. Thursday evening, peer-to-peer lending based live stream. Hope everybody out there is having a great week so far. Almost the weekend. I'm excited for the weekend. Hope you are too. Hope everybody is having a great week. Please hit that little thumbs up button right there on your YouTube screen. Helps me immensely with the YouTube algorithm. We're going to be talking today all about peer-to-peer lending, what's going on in the news, some more closures, not only the big one that I'm sure you've heard about, which from what I understand, some people are not too sad to see this one disappear, but we are rest in peacing to Funding Circle, of course, the last of the big three. Hang on. I don't know if my sound effects are working or not. Maybe not. But salute to Funding Circle. As predicted, you heard it here. I've probably been talking about it for the last 2 to 3 months that I thought Funding Circle would no longer operate its retail peer-to-peer lending business, and that's what we saw announced very recently. Totally not surprised about that, but we're going to talk more in depth about Funding Circle and where they will be going from here and what you can expect as a retail investor. What else? We are going to chat a little bit about Lalendi situation, a couple of things that happened in court over the last couple of weeks, ongoing situation with that. We've also had a little bit of a money thing announcement. And I might just pull up the Trading 212 account because I did make a trade on Tuesday and I have not looked at it since then. And I'm curious to see how my trade is doing. I always expect the worst because there is no guarantee with that, but probably pull that and see what's going on in the stock world just for a little bit. So quick hi to everybody. We'll get things started. Hopefully we can get out of here in less than an hour. It is currently 3:33 p.m. here in Orlando, very hot Orlando. Air conditioning is blasting. Robert Pates is here in Crete, in Greece. Hi, John Day in Nottingham. Full moon tonight. Is that a good idea for investment decisions? I think actually, if I remember correctly, whenever there's a full moon, Bitcoin for some reason seems to do well. And I think you can look at the past historical full moons and look at the Bitcoin price, and it's always done well on a full moon. I don't know why. Hi, John in a chilly Swindon. Paul's here in Stockport. Paul is also here in Kenilworth. Peter Vince from Leatherhead. Mike Powell, not bad down south in Southampton. Colin Perry in the Peak District, of course. Mark Mason. Hi, Mark in Surrey. Stephen Hales here in Nottingham. Annabelle Nyron, of course, Hola. I'm guessing coming from Spain. Hopefully you're enjoying the weather. ES said she was enjoying the funky music at the beginning and realizing it was an ad. Yeah. I actually tried to turn my funky music on today, but I don't know why it's not working, so I'll probably have to restart the streaming software. Paul New and Dave Dawson, Double D, and Brian and Woburn signing in. Welcome, welcome, welcome. If you have any questions or comments, put them in, and we'll get to them at the end of the stream. Let's get right to it. There is no time to waste, because time is all we have in this world. Let's take a look at let's take a quick look at LoanPad. See what's going on with them. I haven't done a LoanPad check-in in a while. And I'm curious to see what is going on with LoanPad. Share the screen. There we go. Let me turn that off. Hold on one second. There we go. So, LoanPad, let's see, average loan size popped up a little bit to £409,000 for the average loan. I think at one point we were looking at about 370. Total lenders seems to be increasing a little bit. Average loan to value is still at 41%, and we have a total amount of LoanPad loans on the books, £53.6 million, with a total loan value of £105 million, with a total security value of £131 million. Interest coverage fund has increased just a little bit from 40,000 up to 42,322. We have no loans that are in the ICF, so no loans that are in particular trouble. Let's see, we've had a total number of 245 LoanPad loans since inception. I like the way they've added some extra statistics in there. And most importantly, estimated time to sell, if you want to get your money out, is less than a day. So it seems to be highly liquid. Still 9 lending partners and 131 total loans. You know, I've been getting a lot of questions about on email LoanPad and what I think about their interest rate that they're paying for their peer-to-peer lending products, since we're having this inflation problem right now, roughly about 5.5%. I personally think it's a lot higher than that. I think those statistics that we receive from our trusted governments are not always very accurate. I think inflation is probably more in the 7.5% to 8% range. So LoanPad, the max you're going to get is 4%, which is half of inflation. Well, this is kind of an ongoing problem right now that we face, as we are forced to take additional risks to keep up with the pace of inflation. Really, the deal with LoanPad is you're getting a pretty safe place to get about half of what the inflation pace is right now. And, you know, it's always a bit of a difficult one, but you have to look at what are the other available options in that safety range. Just really aren't too many. So, you know, the bank is certainly not a place you really can keep your money anymore. Interest rates have gone up a little bit, but we're still not even seeing 1%. So if you take the inflation rate of 5.5%, that means you're losing 4.5% of your spending power on your money every year, which is just really a bad deal. So I continue to leave some money inside of LoanPad as a diversification play. I certainly wouldn't put all of my money in there, because inflation the way it is, you just can't really afford to do that. But I think as part of a well-balanced portfolio of not only peer-to-peer lending and other investments, having a slice of it in LoanPad is definitely something that I continue to do. See here, we got Estate Guru. Peer-to-peer is officially launching in the UK. They are an Estonian company, and now they have offices in good old Manchester with a London office on the horizon. It's branded as Estate Guru Marketplace, and they will fund property and development projects across the Northwest region before expanding its services across the rest of the UK. And apparently they have an outstanding track record across Europe that they think they can replicate. Well, it's certainly a whole different ballgame when you come from one country into another, but obviously we hope they do well. I was just taking a quick look at their website. That's not a company that I've invested in personally. They have a pretty nifty website. Let's see if I can close out these cookies. Make this a little bit smaller. Seems like they've lent about €500 million, which is quite a lot. 124,000 investors with 3,346 funded loans. Pretty good interest rates with, seems like, reasonable loan to values. And what I liked about them is these loans are small loans. They're not, you know, million, 2 million, 3 million euro loans. You can see 182,000, 250,000, 150,000. Different countries, you got German loans, Finland, Lithuania, Latvia, Estonia. Quite a few loans available on the European platform. You know, one thing, when you invest in different countries in Europe, you do always have that risk of, you know, what's happened in the Ukraine. things becoming a little bit unstable in certain countries, I think, are a little bit more susceptible to risk than others. Probably places like Lithuania, Estonia, some of the other Euro countries. Certainly, I think Germany is more of a stable place to invest. Finland possibly too. That's just something you want to think about if you're considering investing in peer-to-peer loans in different countries. But they seem to have a pretty good history of, loan to value is very reasonable, 59%. I like this very much. Here, their average loan size is only 160,000 euros. So, I mean, that's a lot of loans they've written, 3,346. So they have a good track record of lending, 11.22%. See how much is in default right here, only 2.53%, which is really, really good number. And written off only 40,121 euros out of 500 and something million that's been written. So they seem to have very stable statistics. Average return of fully recovered loans, 9.58%. So, I mean, if Estate Guru can replicate these types of returns in the UK, it seems like it might be a place that we could look for future investing. Let's see what we got here. Let's put that at the end. Bondora, our Euro peer-to-peer lending monster, sees a drop in February recoveries for the first time in 6 months. The European peer-to-peer lending platform recovered 74,786 payments in cash. That would be in February. So they are going after back owed money. It's quite a lot. 773,000, so 647,000 pounds recovered, 74,000 payments. That just goes to show you, how big Bondora is. They're going after their recovered monies, which is a good thing. Mentos, lending company, repays loans amid platform scrutiny. A Mentos lending company in Belarus has repaid money owed back to investors to the platform. Mentos said it's excluding loans from Belarus from the primary market and pausing adding new loans from the country until further notice. This is obviously because Belarus has been involved in the conflict over in the Ukraine. So a lot of companies are shying away from Russian and any countries that are supporting the Russian side of the conflict. Curiously so, Mentos faces 15% fall in revenue from its lending companies. I still have some money in Mentos invested. I'm going to take a look at my account because I haven't looked in a while. So I figured, hey, why not do it live on the stream? Let's see what's going on with the account. But yeah, they are facing a 15% drop in revenue from its lending companies due to the impacts of the war in the Ukraine. Despite this, the European lending marketplace, Mentos, says it is confident about weathering the storm with its available cash balance. Transactions with Russia are disabled by many banks due to sanctions. Russia allows transfers exclusively into rubles, but banks are not willing to hold the rubles anymore. So this is creating quite a problem. You can see the ripple effect that is happening in the lending world with companies, credit companies that are located in Russia and are trying to lend money through the Mentos marketplace. Obviously, that is not happening at the moment. But let's go ahead and log in to the old Mentos backend. As you know, as UK peer-to-peer lenders cannot invest in Mentos anymore. And we have been booted out. Let's see where we are. Oh, it's not looking very good at the moment. Mentos is one of my gem companies. I was loving them several years ago. We were having these loans that had guarantees on them. The mistake I made, honestly, with Mentos was trying to do the auto lend instead of picking out my own loans. As soon as I did the auto lend, things really seemed to go backwards. And here's why. You can see right here, It's not a huge amount, but I never had a huge amount invested in Mentos to begin with. But 226 euros is now in recovery. So you can see right here my total lending profit inside the euros in Mentos was only 467 euros and 27 cents. And 226 on top of that now is in recovery. So let's have a look and see what is actually going on. Oh, GetBucks. This is our African company that we managed to get invested in through the auto fund. This is one of the problems with auto lending. You can get stuck into a bad company. So let's see. Look at all these defaulted companies here. GetBucks. Here we go. March 3rd. MyBucks SA, the guarantor of GetBucks, has entered into bankruptcy proceedings. There we go. So they were trying to merge, but that didn't happen. Now they're in bankruptcy, so I'm presuming that this 226 euros of mine is poof, gone with the wind, out of here. But, you know, this is the way it goes with peer-to-peer lending. You're going to have some winners, you're going to have some losers, and hopefully if you can win some of the time, or if you can win more than you can lose, then hopefully you come out on top. Bit of a shame. So let's talk about the big news this last week. Funding Circle exits peer-to-peer lending for its retail investors. We spoke about this over the last couple of months. I said that I thought Funding Circle was going to disappear. One of the few times that the crystal ball has been right. It's usually not right, but it's been right. And they unveiled their first annual profit. I mean, that's crazy if you consider how long they've been in business for. But Funding Circle has permanently closed its retail platform to new investments, joining the other big three of Zopa and also RateSetter. So now we have said goodbye to the big three that originally were the pioneers of peer-to-peer lending. The CEO, or Chief Executive Lisa Jacobs, says there's been a big shift. The industry has shrunk severely, and it has been quite a difficult decision. Jacobs said the group's retail investment has shrunk 80% since it was stopped in March of 2020 to focus on government loans, and now represent less than 5% of loans under management. I'm curious why that was a difficult decision for Funding Circle. If you've only got 5% of loans under management that are retail, it seems like it would be a really easy decision, probably one that they had been thinking about for a really long time. I mean, they were obviously focused on the government side of the lending, which CBILS, government-backed lending. If you're a lender of Funding Circle size, you're going to go to where the money is, and money is not in retail peer-to-peer lending, especially when you get that big. So I don't think it was a really difficult decision. I think it was an obvious decision for them. Also, they're having a lot of issues with money and recovery. I actually logged into my Funding Circle account today and found a little bit of cash in there, which I don't really know where it came from, presuming it's from some recovered loans, because I haven't been investing through Funding Circle for quite a long time. But yes, I think it was a pretty simple decision for them to make, one that made sense. So they had actually unveiled a first full year of pre-tax profit of £64.1 million, compared with a loss of £108.1 million in 2020. Pre-tax profits in the second half of the year were $28.7 million. So you can see obviously what had happened was when Funding Circle started lending using institution money to CBILS loans, their profits started to go through the roof, whereas doing retail peer-to-peer lending, their profits were going down the swanny. So yes, I think it's a pretty simple decision. So that being said, with Funding Circle exiting the retail peer-to-peer space, you remember a few weeks ago we looked at this spreadsheet, which are the peer-to-peer companies and their fate, which I had actually invested through. So we just have to go in here now, change this. Let's copy this, because now Funding Circle is closed its peer-to-peer. And incidentally, I don't know if anybody else got an email from Funding Circle announcing this. I didn't. I was looking through my email inbox and didn't see anything about it. So I presume they're just going to keep on paying out the retail side, the peer-to-peer lenders, until all of the loans are run down. That would be my assumption. There was there's another article in the peer-to-peer finance news.co.uk that was asking, is it worth backing Funding Circle shares? So Funding Circle shares were originally released at 440p a share. On this article it says it now trades around 70p. Mr. Neil Faulkner from Fourth Way thinks that Funding Circle is a strong buy. He says it right here. He's quoted in saying, well, I have to say, Mr. Faulkner, I respect you. Do I agree with you? I don't think so. Strong buying compared to what? That would be my question for you. Let's look at the chart. See if I can pull it up. I think Funding Circle as a share is an immensely risky play. You're talking about a company that has not been in profit, I think, for either as long as it's been in business or ever. So maybe getting rid of their peer-to-peer lending retail side will make them a profitable business, but I think that you are going to see a lot of risk if you were to invest, in Funding Circle shares. You can see right here, I think this is the all-time chart when Funding Circle was released here in 2018, September. You've just seen this real decline. What we've actually seen is from here, I'm going to draw my little rocket ship. Hopefully it looks like a rocket ship and not something else. There's my little rocket ship. And all it's done is gone, oh, crash. Oh, crash. Oh, a little bit of a rise up here, but for generally just more and more and more, and then so now trading at just 65p a share. We were minus 3.7% today. Personally, I do not say this is a strong buy. I think there's just so many other stocks out there that you have a much better chance of getting good returns from, rather than Funding Circle, which I think is a very, very risky play. So I'd have to say, Mr. Faulkner, that you and I may have some different opinions on Funding Circle shares. Now, if you consider, well, the share was at 465p or 440, whatever it was, now getting it to 67 seems like quite a deal, right? Is it though? It's trading at a pretty small price to earnings, but again, the risks of Funding Circle, I think, as a business are very apparent. You've got a very large operation with very high expenses who's just finally been able to get into the profitable zone. And I think what is going to happen is some of those loans that they've written, they're questionable. I don't know whether they're going to be paid back or not. And if it turns out that they've written some bad CBILS government-backed loans, that's going to affect their business. So we'll see what happens. Hope you're enjoying the content. If you are, give me one of those, please. Helps out a lot. Some of the industry has been giving their feedback about what they think. about the funding circle closure. Stuart Law said, "It's sad to see that funding circle are exiting the retail investment world, but it was something that has been developing and flagged by them for some time now." Bruce Davis from Abundance, he said, "It's disappointing that funding circle has exited the sector. But this does not represent any reduction in the demand for such products, but instead in many ways shows their attractiveness given the flows of institutional capital." Is that true, Bruce? I don't know. I think we've definitely seen some reduction in the demand for peer-to-peer lending products. A natural evolution. Rishi Zaveri, chief executive of Lendwise, says funding circles closing down their peer-to-peer is a natural evolution which reflects the source of their loan funding, i.e. that most of it comes from non-retail sources. Their decision to step away from the peer-to-peer market retail-wise doesn't diminish the future of peer-to-peer lending. Totally agree. Lee Burkett from Just Us says the news is not surprising. And Narendra from Kuflink says an understandable decision by Funding Circle, particularly as they now have other sources to fund their operations, hence institution money. And then finally, Nicola Horlick, Chica's exec of Money & Co., says she's not surprised. It's closed, but it is a shame. I think it is a shame, and I think it's just a continued contraction of what we're saying. The big companies cannot afford to operate at the size they are operating with small margins. A certain CEO of a peer-to-peer company and I had a conversation about this pre-COVID where he said to me, a lot of these peer-to-peer companies are operating on very, very small margins of maybe 2%, and he didn't understand how they were able to do that. And he correctly predicted that a lot of the big companies would end up selling out or closing their doors to retail, which is exactly what happened. You can only continue to operate for so long with small margins before you end up going down. So there you go. Let's see what else we got here. Oh, I was going to take a quick look at my Funding Circle account. I think it's always fun. I got some money in there that is gone. It's defaulted, bad debt. Working capital loan, retail, £14. So some small amounts, but quite a few loans here that are stuck. And even a A-rated property loan, which bad debt. A B-rated loan, bad debt. Another A-rated loan. I wonder if I can see what these loans were. I don't remember. It's such a long time ago. Go ahead and sign in. But if you're a Funding Circle investor too, I'm sure you've had some of the same experiences with even loans that were rated really well on A were not to be. This is one of the loans that went bad. It's a 10% loan, risk A. Artisans of London, property and construction, years trading, 12 years. I guess I feel bad that some of these people have invested quite significant amounts of money. We got somebody here put in 4,480, another one 8,880, 7,000 here. So yeah, oh look at that one, 11,640. So not a great situation for them. Assets Capital and Aros Capital have a funding partnership which is increasing by £750 million of funding from Nordic finance provider Aros Capital with a K. This is money that Assets Capital has secured to increase their CBILS lending that this partnership began in 2020. It's continuing to get much larger. This is eventually going to amount to about £1 billion of lending lines that assets will be able to use for their funding. Now, I do wonder about assets. What is their commitment to retail peer-to-peer lending if they now have another £1 billion lending line that they can use to fund CBILS or other types of lending to SMEs, will they need retail? Is this another one of the big ones that will eventually say, we really don't need retail peer-to-peer lending money? And this is something that I hope to ask Stuart when he comes on the stream. I believe he'll be here hopefully the last Thursday of March or the first Thursday of April. So we'll get Stuart on here and we'll ask him some of these questions. Make sure that Assets is going to continue servicing the retail side of peer-to-peer lending. I'm interested to know that. I'm hoping for the best, but I think logically it seems that they would not continue in the future, maybe to service retail. I don't know. Let's find out. Lendy's head of development said he was unaware of the property valuations on the platform. He went to court. He testified. See what he said. Where is it? Where is it? Here we go. And the mouse in the court. Mr. Mouse has been in court again. There's 3 cheeses up here. Alan Darling joined the peer-to-peer lending firm Lendy in May of 2006 as their head of development. His role was to grow and head up the development loan side of the business. As then, Lendy only facilitated so-called bridging loans. Lendy was obviously subject to serious mismanagement, but he testified in court that he really didn't know that Lendy was offering overvalued loans. He was surprised by that. There was another story too. I thought this was quite interesting. Lendy borrower fails to find Mr. Mohammed at High Court. So this is a story about a woman that took out a loan. Some of you may have invested in this. It's the Gatehouse at Stoke Park. In August 2016, a loan of some £1.25 million understood to be collectively financed by 1,246 poor souls who put their money into Lendy. I don't think I was in on that loan. But this money was given to a Miss Petra Omaru of Bromley. She's 41. Following the default of the loan, the property was sold at auction by receivers for £1 million, leaving a balance on the loan of about 300k. And what happened is the 300,000 was walloped with an interest rate of 4.4% per month. It's a lot. That's 48% a year. And that compounded, and it grew from 300 grand to a whopping 3.72 million pounds. So this woman who owed 300 grand couldn't pay it back. Apparently now she owes 3,726,000 pounds, 138 pounds, 0.54p. The court was told that due to lack of funds, this poor woman couldn't pay her solicitors, so she was appearing unrepresented. She, in fact, had to leave her 12-year-old child in the corridor outside the court because the kid wasn't allowed in. The judge said that she had entered into these agreements fully knowing what she was doing. And this woman, let's call her Miss O because her name's too difficult to pronounce, but she met a guy called Mohammed Qadir, who's apparently a friend and a neighbor. And he had a long-standing relationship with Lendy. And as far as Miss O was concerned, Mr. Qadir was a man that was completely the face of Lendy. I don't know why she thought that. It was during this meeting that Miss O claimed she was promised heaven and earth in relation to furthering her investment portfolio. By obtaining a loan from Lendy, the potential profit from flipping the Stoke Park property was in the region of £700,000. She thought she was in for a windfall. Miss O apparently told Mr. Qadir, Mr. Mohammed, that she was in receipt of benefits and she was currently unemployed. She said, "How am I going to pay this loan back?" And he said, "Don't worry, we'll look after that. We'll sell it for you. You don't need to do anything." She says that's how the conversation went. It is said Mr. Quadir arranged for the initial deposit for Gateside Lodge to be funded by remortgaging Miss O's main residence and 2 buy-to-let properties she owned. Now, after the Stoke property was unable to be sold, Mohammed apparently disappeared from the scene. He was nowhere to be found. And unfortunately, the problems continued. The Stoke property was found to be riddled with critical rising damp. So then it was sold. So now this woman owes £3.7 million. And then the court also heard this live evidence from Mr. Alan Darling, who was the head of lending, who explained he had never heard of Mr. Mohammed, and that at the time, Lendy would not lend money if they didn't believe the valuation was correct. I'm not aware of giving anyone false hope, he said, if the borrowers were misled with prospects over ease of payment. Well, this poor Miss O, unfortunately, she lost the case. The judge finding wholly for the claimants, the court guaranteed judgment for the outstanding capital, accrued interest, the receiver's costs and expenses, and very importantly, Lendy's exit fee of $25,000. So Liam would like to get his $25,000 out of that, which is a shame. And unfortunately, Miss O has been saddled with Lendy's legal bill of £111,230, which Mrs. O says, I see no reason why I should pay anything, and secondly, I have no money to pay. I feel like I have been unfairly treated. The court has ordered that Miss O has to pay $75,000 back within 21 days. She doesn't have any money. Lendy and the investors, which is us, is not going to see any of that money back, let's face it. But just another interesting twist in this debacle that is Lendy. Let's run through the rest of this news real quick. What else we got? Fellow Finance has shut down its peer-to-peer lending arm to focus on banking. Just another peer-to-peer contraction in the industry. We've also got another one. Propio has dissolved. They raised £278,000 using the government's future fund to support its move into peer-to-peer lending, but they have decided not to proceed forward because the FCA has put them on a watch list. Not good. And then we have Wellesley & Co. Their company voluntary agreement, means they're closing voluntarily, process is coming to an end. And the first installment of its loan book sale payments has been scheduled. They say, we are pleased to have completed all CVA payments, and we completed the preference share issuance before Christmas. Therefore, expect the CVA process to be formally confirmed as being near complete in the near term. Separate from the CVA, we have made the majority of our loan book sale payments, with the final installment expected at the end of February. Now, to be honest, I don't know what that means for investors. I don't know how much investors are going to get back. Only the administrator seems to know that. Let's see what else here. Oh, this is, I thought this was kind of ironic. I had to show this to you. This was something that was filed by MoneyThing in the court system. And obviously MoneyThing closing down their business. MoneyThing has appointed a concurrent administrator of MoneyThing Security Trustee, and his name is James Money. So James Money is now a concurrent administrator in the MoneyThing administration. I mean, what a great name, right? I don't know anything about Mr. James Money. I don't know who he is, but I think he has a very cool last name. Okay, finally, I do have to have a quick look at our Trading 212 account because I made a trade. I'll show you what the trade was right here in the history. We shoved 800 pounds into Vermilion Energy on Tuesday. 7:44 UK time in the evening. A fill price of $20.02. And I had to have a quick look and see how it's doing. What the price is, if we made any money. Here we go. $20.58. So, what's that? A 56 cents gain. I think we have about 55 extra shares of that. So we made a bit of money, about 25 pounds or $25. So yeah, that's a win, I would say. The portfolio's gone up a little bit. 16,116, 16,116. So yeah, everything seems to be doing okay in the oil world, and we'll see what happens with that. That's what I got for you this week. 45 minutes in. Hope you're enjoying it. Of course, we had the Fed, by the way, raising interest rates in the US this week. I think this will have a knock-on effect. 25 basis points, so 0.25% interest rate hikes. I think we're going to see, if I had to guess, 7, maybe in the next year. So, recession, possibly. We'll see. Alan Brooks has got a goose from Pinner. That's some language I don't really understand, but I think he might have meant to say good evening. So there. Annabelle, dreadful weather. Dreadful weather in Spain. Look closer. Look at the updates. There's a loan in default, but partner is covering the interest. Oh, is that in? That's in LoanPad. Invest 22 here from London. Get bucks. Okay. Brian says, I wouldn't invest ever in Funding Circle again. Bad unsecured loan book. Absolutely. Well, you're not going to be able to, so there you go. Probably best for everybody involved. No, I never got an email from Fund. Maybe I opted out. I don't know. Yeah, Funding Circle has definitely had some defaults. Brian says, Funding Circle, awful buy for the investors who were fleeced with an overhyped offer price. Within weeks of launch, it was down from 440p to 50p. Yeah. I mean, honestly, you got to do your due diligence on these share offerings. Mike left Funding Circle 10 years ago. Good decision. Got to go now, Robert. West Ham kickoff. I don't know. Is West Ham a good football team these days? I don't really cover it. Does anyone invest with abundance? No, I do not. Funding Circle is one of the worst loan books in peer-to-peer lending. Will Assets Capital keep the funding line when the government loan scheme ends as the risk profile increases? See, that's one of the questions that I want to ask you. I want to find out what is the plan going forward. If they keep that line, I mean, I can't imagine they would continue on with retail, but who knows? I could be completely wrong. AccuChap is here in Accrington. Nice to see you. Yeah, I know I've given you a lot of bad news tonight, but I will say, look, with all this bad news, the one good thing that is happening with the peer-to-peer lending industry is we've had this contraction, right? But you've had a contraction into a handful of really good companies that are doing, I think, personally, not financial advice, but they're doing good things in the industry. And I think they'll continue to thrive. They'll know what their niche is, right? I mean, the big three, the problem was that they try to become these monstrous finance companies. And there comes to a point where you just become it's too big, you have these operational issues. You've got to try to find enough business to keep that operation profitable, generating enough income. It's happened to, obviously RateSetter. It happened to Zopa, who went into the banking side of things, and then some of the other companies too. See, LendingWorks, Funding Circle. They just became so big, and I think the companies that I see now, right now, that are doing really good things, they know what their niche is, and I don't think they're trying to have 10 billion pound loan books. They know what their niche is, and they're happy to continue on that path. So I think with all of this bad news, there's just a flush out of the bad players in the industry, and it's really what you want to see. I don't think it's such a bad thing. Obviously losing money is never a good thing, but the flush out has to come. Anyone else you're recommending as a solid peer-to-peer other than LoanPad, Crowd Property? I mean, we've got a couple of new entrants. I think Plend might be somewhere to look at. I like Robert. I like what he's doing over there. Again, still early days, but I think they've got an interesting proposition. I think Unbolted is doing slow and steady. Propland. I think I like that chat, though. If you didn't watch last week, you weren't here. Look at the interview with Shojin. I like what Shojin's doing. Just a little bit outside the comfort level of what I'm willing to invest. You got to put in £5,000 alone. Maybe if they reduce that, that would be a good place to look for me personally. So yeah, I would, think those few are pretty good at the moment. Yeah, and I like what Peter's doing at Assets Exchange. Again, I think if you were to diversify into that bucket of 5 or 6 or 7 really solid peer-to-peer lenders, you'll be okay. So, all right. That's going to do it for this week. A record. We did it in 52 minutes this week, so I'm happy about that. Please hit that thumbs up, subscribe. If you want to join and become a member, you could do that too. Just hit that join button. It's very cheap. And we'll see you next Tuesday for stocks and crypto, or next Thursday for peer-to-peer. Same time, same place, all being well, God willing. Love to every one of you. I appreciate you being here. Have a great weekend. Enjoy yourself. Life is good. There's more to life than money, right? So be healthy, be well. Speak to you next week. Bye. Take care.